Replacement cost is basically going to be, so for instance, if you have your roof, so just say you have a house, and replacement cost is you have a hailstorm comes through, you pay your deductible, and then the roofing company puts the new roof on your home, right? So that's replacement cost. Basically replacing what you lost minus your deductible. So say, for instance, the roof was rated at a 30-year roof, but actual cash value basically takes in consideration the depreciation. So it's, you would basically take the value minus the depreciation, minus your deductible, and then that's what the insurance company would pay out.
So the RCV one, it could be a $30,000 roof, and they pay out $30,000 minus your $5,000 deductible.
Yes.
They're going to pay out $25,000. The homeowner is out $5,000.
$5,000.
So that same roof is 10 years old. Now the homeowner is looking at still a $30,000 claim. They have a $5,000 deductible, and then they have about $10,000 extra out of their pocket.
Say if it was depreciation, so if the depreciation schedule basically said, hey, it's $10,000 is the depreciation on this 30-year roof, well then at that point you would basically take out the $10,000 for depreciation, the $5,000 deductible, and then that's what the insurance carrier would pay out of pocket, and then the consumer, the homeowner, would be responsible for the difference.